This is Just AMZN on Wednesday, August 28th, 2019. Taking a look at the 5 minute of how things moved today. And pretty much the only play was buying right off of 1747 and just riding up and taking profits wherever, anywhere on the way up. Because as it went sideways all day, just premium disappeared on all the calls. Um, so this happened too early for me today. I had alert going off at 1750. I didn't like how it sold off so quickly into that. I thought it was actually going to bounce here a little bit and then roll over. It ended up actually holding, which was really good. It made a new lower low on the day, new lower high on the day. But I was very cautiously bullish and ended up trying to play something a little bit higher once some of the premium got sucked out. So looking at the 1800 call we were looking at yesterday, this is how the option dropped in value from like $2 all the way down to almost $1, put in a low of $1.10 at 9 o'clock. And we'll go back to the 5 minute, and the 9 o'clock candle is this one. So even though it pulled way down here, there's just too much premium in the first 15 minutes of the day that market makers just trying to get people to pay a little bit more, and granted people will, to get into something. And so it's just crazy that you could have been buying a call down here and it would have been sold for less up here, which is opposite. It's like counterintuitive, but that's why I wasn't getting into options down here. It wasn't getting into calls down here because it's just really hard to have the right value on the option until you wait a little bit. And so as I waited, I saw, okay, that's a really nice bounce here. It kind of S-curved quickly, got going with a Morningstar reversal. Once it got up here, it's like, okay, we're clearing the highs in the day. We cleared yesterday's high. Let me get the next pullback. And I was getting in around like 10.15, 10.10, somewhere in there, and looking for that to go higher. So the price here, 10.10, 10.15, a little bit higher on the 1800 call. This was at 150. So you could have still been buying here, 150 by $1. It just didn't get going. It made it up another 50. Excuse me. It made it up to 2, another risk unit, another 50. But it just didn't keep going. And I was looking for it to do a bigger it did the S curve. I was looking for it to have a bigger move after the S curve, and instead it just went sideways, giving it some room here to continue on up. Instead it pulled back again, and just kind of hovered back down to into this losing range, where you're down in the position. Actually, this is the 1800 call. I was playing the 1805 call. That moved a little bit differently. I don't like trading the same call on different days, just so that I don't have any sort of wash sale thing ever have to come up. But anyway, let's see, I bought $1 at 10, so I was buying at $1 right here. So I was one of the fills of 6 that were bought here, with a stop down at like 50 or something like that. I think it was $1 by 50, and that moved up. I didn't even realize it was up half an hour, or up 50 at this point. That would have been a good place to put a target like I did yesterday, and I didn't have that set. I had my target set higher, thinking it was going to do a bigger S curve. I keep saying bigger S curve. I was going to have a bigger rally after the S curve, and it just didn't. Came right back in here. It was just kind of hovering around this point, and I didn't think it was going to get all the way back down to 50. So I did call it add and reduce. So I added another call in this range. I think it was around 90 cents, somewhere in here. Maybe it may have been one of these, or there was one traded, something like that, at 90, just to see it pull back a little bit more. But with an add and reduce, you move your stop up. So my stop was at 75, and it just hovered around through here. It perked up a little bit, and at this point, it's like, all right, I'll just get out for anything. And I had a target at $1.10, just thinking, okay, I'll cover commissions and have, you know, a tiny bit more, but that didn't even fill. So right at the close, I was exiting for 85. So it took a small loss, a little less than half an hour loss. And, you know, really it wasn't very far that it moved down. It held the value um, as it went sideways all day. It really, like these higher lows all day only lost a little bit of premium, um, you know, with the 1805 or the 1800 calls. It's the ones that you're closer to the strike where you're going to see bigger fluctuations. So this is one that had a little bit bigger fluctuation. This is just $5 the other way. So had I bought 1795 instead at 10, you know, so 1015, somewhere in there, could have been buying 225 at a stop down at 170, excuse me, 175. That would have moved up. Oh, not wouldn't have moved up $1. Not quite. Okay, so gotta go a little closer. Let's go with 1790 and see how that one moved. Okay, so 1790. I haven't figured out a way to turn off that theoretical value when I go to it. So I have to delete it, remove it every time. If someone knows how to have that set to not show up, that'd be great, because it just gets annoying to have to remove and hit OK every time. All right, 1015 could have been buying right at $3. That's actually really nice. Nice round number. I don't know if it would have been filled at 3. That had a really quick move up to 4. So 1790 was probably the better option to go with. Buying at 3, stop at 250. Possibly would have been stopped out down here had you not exited anywhere up here. Let's go a little closer and see. This is the 1785. Let's see how these are moving. There are strikes every $2.50 on Amazon. The only time I would really get into one of those would probably be on a Friday, where I have a strike that we're gonna, you know, showing some pivot nearby or target nearby, something like that, where I think, okay, we should be able to get into the money on this one. And once you get into money, then the Greeks kind of help you out. And it's otherwise I prefer to just go with $5, a strike ending with a 5 or 0, whole dollar. Otherwise, you know, if you're, you know, another day or two or anywhere early in the week, I like sticking with the definitely the 5s, or every 10, preferably 25s, and every 25. So like 1800 was the one I was looking at yesterday. I played the 1805 today just to not play the 1800 in case I had a loss, that I could still, you know, it wouldn't count against my profit on the 1800 yesterday. So in that case, it's not a wash sale, or it doesn't even come up that I, you know, had a loss against the same strike, because it's a different instrument. So anyway, just things I've picked up over the years with taxes, and there's enough strikes in Amazon that you really don't need to ever trade the same option. I do talk about trading the same option within a day, looking for things to move. And within a day, I mean, it's the same instrument in the same day. I don't know how any sort of tax thing comes into play. Tax rules come into play within the same day. I mean, you're already day trading. So they don't look at the time of day that you bought. It's just, you bought this many at these prices, you sold this many at these prices. You know, anyway, it's just one of those quirky things I do, I guess. Anyway, back to this 1015, 1020, you're buying probably 425, maybe even 450, possibly, with a stop at 4. That moved up to 6. That would have been really cool. So this is the 1785. Definitely would have been stopped out down here. But that S curve was really nice at 1015. After it made a new high in the day, just waiting. And, you know, my gut, and let me switch back to this. When I saw this going up, it's like, oh, I'm missing it. Saw this pullback, saw it start to break out. It's like, man, I am going to miss this. It's just going to go without me. It's like, nope, I've seen this happen plenty of times before. Let me wait. Let me be more patient. Let me just set it up and just wait for it. And then there you go. 1, 2, 3, 4, 5 bearish candles in a row. Let me zoom in on the day here a little bit. 5 bearish candles in a row. This one making a really nice hammer. If you're looking at it in the lens that we talked about yesterday, you can see, and just ignore all this. I didn't want to just show, I didn't want to just show this on my screen, but okay. Now that we're looking at this, as we're getting, okay, right here, from open to where we're up, there's a lot more bullish candles here. There's more bullish bodies. You don't have those little wicky bodies, not even wicky, it's just small bodies. And then the next few candles here, you get a couple big bearish candles. Here's some more wicks on the bearish candles here. It's like, okay, this is still up. So I've got some larger bullish candles. I got some smaller bearish. It's like, I think the edge is bullish on this. And then you start to get these bigger moves again. This was a really nice bullish gap and go out of 5. This was a nice bullish retail, some nice candles playing out with this. But anyway, it's kind of hard to focus on it and see what we're talking about here. So just looking at this, okay, this is a really nice S curve. Just this one pulled back a little bit too far. Kind of showing signals that, okay, it's crossing the 21 with force. Nope, it recovered. It recovered quickly. Made a new high in the day. So this was making a new high in the day, sold off. This made a new high in the day, looked like it was going to pull back, started to bounce. Okay, now it's going to sell off and pull back below the low of the day. This is where I want to get in. This is a great S curve. I just didn't have the target set for what today was doing. And I thought it was just going to continue this. I mean, all day today was S curve, S curve, S curve, S curve, S. Nope, didn't work. So all morning it was doing that until late morning where it stopped. It started going sideways. And this is where I should have been changing. When this kind of shift happens, where it's not continuing with that pattern playing out that way, this is where you can get more aggressive with your target and cautiously move your stop or wait on your stop, because there is the possibility it's going to come back to your entry. And it did somewhere in here. It came back. And then all the rest of the day, as the premium got sucked out, it was below my entry. So until the end of the day, this was starting to rally here. And this was the only blip that I saw that popped above. I already changed off the option. Popped above my initial entry for $1. This was at like $1.05. And I was setting it up for $1.10, and it didn't get back up there. A lot of sideways. Just like the other day, we have some lower highs, we have some higher lows, start to break out, retest. This one started to retest, pull back a little bit after hours. Or I'm sorry, during the day, whereas, which day was it? This day, 2 days ago. We did the lower highs, higher lows, broke out right at the close, and then we're doing the S curve of the pullback after hours. So very similar how we went sideways here, consolidated, and then started to break out towards the end of the day. Very similar to 2 days ago. And funny enough, those were the 2 bullish candles. Bouncing right off of 1747, pulled back into it a little bit further. So right now we're still below the 5. If we can get a gap up tomorrow, I think this could turn into a double bottom sort of shape with a neckline up here. So we should see that push through, pull back a little bit, and then go. But we are still in the lower end of this range. If we take out the low, if we gap below the low, look out, because now we've had more bulls coming in. This is really looking like a stair step. Volume is dropping even though we had a bullish candle. There just wasn't much bullish about this other than it closed higher than it opened, which that's a bullish candle. But anyway, so we've looked at some options. Let's look at 1775 since we're so close to it and see how this would have played out. So at 10:15, I could have been buying something around 8. So 8 by 750, 8 by 7, that would have been nice. That made a pop up to 2R at 10. So 8 by 7, so 1775, that would have been the better call to get into. Better than 1800, just the way that things moved. This one did definitely move into 2R with a $100 risk. I like that. And then you had that initial sell off at the open, but this held the value much better, and you could have been getting it at 6, it looks like, with a stop down at 5, and ridden some of these S curves up. This one from 6 up to 10. That would have been a nice 4R. So even with $100 risk, knowing what option to get into, I was looking to get into something with a small R with something further money and moving closer to at the money. It didn't work. It didn't work today. It worked well yesterday. Worked pretty well yesterday, but today didn't work. And so some of that is, it comes back to how the day moves, how the price moves, but also has to do with the strike and how far away we are and how many days we are away from potentially getting there by expiration, or really just how far it is or how long it is till expiration. So a Tuesday yesterday where I'm at the 1800 calls, there's going to be a better movement, more correlated between Amazon stock moving and the option moving than a Wednesday, where we are moving directionally, but it's not as well correlated as the previous day. And so the option was relatively flat on the day, whereas yesterday it had a nice little pop a few places. So taking that lesson, and I hope this is helpful to share this kind of stuff that I'm learning, looking, like, really focusing, getting in the trade and seeing kind of where am I at mentally on what's going on, and what am I observing. And so yesterday I made some money, and today lost some money, and getting some lesson out of it. But looking for tomorrow, be careful of being further out of the money. You just can't be. The option's not going to move the way you want it to. I don't recommend doing absolute zero unless it's close enough that it's realistically able to get in the money into Friday, or even the same day, doing it as a day trade. I'm not recommending holding overnight into options expiration. It can help, like it can work once in a while, but most of the time it's gonna go to zero, and you're gonna lose that R. And I've played plenty of those too. I don't know how many I've played. It's that many. So tomorrow, look for the 1775 strike and anything closer for calls. For any puts, 1750 strike and anything closer, as long as we open in this range. If we open this range, we're still in the bottom half of this no man's land. We'll probably consolidate a little bit more unless we can get some sort of, I don't know, significant move. And I don't even want to say it's a gap. I don't even want to say it. It's like getting a triangle like we had today. This way, having this kind of a triangle. Let me just sketch it because I'm drawing with my cursor and I don't want to miss this. Okay, triangle. That was a bad triangle. That was a really bad triangle. There's must be something on my desk that's getting in the way, like my hand. Okay, something like that. Really nice little triangle. Does this breakout, retest, S curving, and then should continue up doing something like that. Alternatively, if it breaks out and then does this double top, this is one of those where it's like, okay, it looks like it's going to break out. It's just holding the high through here. That was a really bad straight line. That's a little better. Double top, something like that, runs into that, evening star reversal, breaks down, whatever it is, and ultimately rolls over. So we got to wait for some of those signals. The 21's a good level for it to pull back into and hold. Didn't hold here, held here really nicely, didn't really hold anywhere else in the day. So it worked at a point in time that I was getting in. That's one of the things I'm watching for. and just should have been taking profits up here as it was breaking out, because it makes sense. It's if it's breaking out on the day, there's going to be some bears that come in and try and sell it back down, and they did, and they held it down. Um, yeah, good lesson for today. Anyway, back to the daily. Let's see what we get tomorrow. See if it gaps, see if it opens inside. It can go sideways like this for a little longer, a lot longer actually. So we'll just have to keep an eye on this value and see, do we think we're going to bounce? What's the plan there? Do we think we're going to break down? What's the plan there? We'll just wait for the chart to show us. It'll show us. And then we'll have to scramble to be on the right side of the trade, and hopefully we've got some ideas that help with that. So anyway, I hope this helps. This is Justin AMZN. Thanks.